This content is brought to you by iTrust Capital, which is a great platform that allows you to easily invest in crypto without worrying about taxes or fees. iTrust Capital allows you to invest in crypto through an individual retirement account or IRA. IRAs are tax sheltered accounts, which means all of your crypto is tax-free and can even grow tax-free over time. The process of signing up with iTrust Capital is very easy. They have a mobile app. They have 25 plus cryptocurrencies. They have full support, a dedicated team ready to help you. And it is free. And once again, 100% free to sign up with iTrust Capital. There are no hidden fees and there's no monthly subscription or membership. They also have great security. They utilize Coinbase custody for all their custodial services. So you don't have to worry. It is institutional grade crypto custody that they are using. This is a great platform. Once again, it is free to sign up. So visit the link in the description and go check it out. If you sign up with my link, you get a $100 funding bonus. So once again, check the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Joe Endoso, who's the Chief Operating Officer at Linqto. Joe, it's great to have you on the show.
Pleasure, and thanks so much for having me on. It's a pleasure and a privilege, Tony.
Joe, as we were talking about before the recording, Linqto is a platform I've been hearing a lot about, and you're certainly providing the ability for folks to invest privately into certain crypto companies and others as well. And I want to learn as much as possible and go into it and do a deep dive. But let's start with your background. Where are you from and where'd you grow up?
I'm from everywhere. So I was born in Manila. So I'm a Filipino by heritage, but I left when I was 2 years old, Tony. My dad was in the Foreign Service of the Philippines. And so he got posted to a whole bunch of different countries around the world. And that was my growing up, basically, moving from one place to another because my dad, changed his assignments from one post to another. I had the great benefit of therefore living in many different countries, experiencing lots of different cultures at a very young age. And we immigrated to the States when I was in my teens. And I've been here ever since.
Very cool. And tell us a bit about your professional background before Linqto, and how did you end up at Linqto?
I've spent most of my life basically in investment banking. That's pretty much, I've worked in different parts of banking, but that has been my career until approximately 2016. So I had worked for both large global banking firms. And then at a certain point in the mid 2000s, I decided I want to be an entrepreneur. So I left the large banking firm that I was at the time and set up my own little boutique investment bank. And that was an emerging markets focused firm. I still have I sold that and then have another firm today with a bunch of friends and partners. And that firm is still around in DC. But at the end of the day, whether I was being an entrepreneur, running a boutique firm, or working for a large global banking firm, I was still an investment banker, right? But the big change happened in 2016. So I've been reading lots and lots of stuff about fintech and particularly about crypto. And in 2016, I got to the point where I said, this is going to be big. This is going to be huge transformational change that will impact a whole variety of very old incumbent industries, including the one I was in, including banking and finance. So I wanted to be part of that disruptive change, right? It's like that saying in football, you're either you move the ball or you get moved.
Sure.
And I didn't want to get moved. I wanted to be the one moving the ball. Yeah. So I left in 2016 and got involved with a bunch of people I knew, and we basically did a startup in crypto. And that crypto startup I took through 3 rounds of funding as the CFO, and ended up we built a product, we brought it to market, And like many of these things, it was a terrific product. The company's still around today, but we were early. We were too early, right? So what we had built was a new architecture for a high frequency trading platform, electronic trading platform for crypto. And the whole idea was that institutions, particularly regulated institutions, that were going to be part of the crypto adoption, would need this kind of architecture to solve a whole bunch of problems, right, that they have in order to be able to trade crypto in the way they trade other assets today. So unfortunately, those regulated institutions, even today, they're talking about it, they're planning on how to get into it, but they're not in it yet, right? So that was the problem we had. So by 2019, it was pretty obvious to me that we were early, and I was looking for an opportunity to do something that would kind of get us to that same place, but through a different route, a route that would allow us to address a market that was already available today, where we could get customers at scale today, where we could generate revenues at scale today. And that turned out to be the private markets, and that company turned out to be Linqto. So, I met our founder, my business partner, Bill Saris, who's the CEO of Linqto, in 2019. He was looking to pivot his company because he had this company for about 9 years at that point in time. And their history had been about building mobile apps for banks. Right. Nothing to do with crypto, nothing to do with private markets. But he realized that they could take a lot of that technology and expertise and direct it towards something that was a more meaningful market. And that turned out to be private markets. So, we joined forces and we pivoted the company to what it is today. And we launched the platform in February 2020. And ever since, it's been a terrific run.
Yeah, you guys have seen some significant growth, and it seems here, let's see, as far as the statistics that I have, you have reached over $119 million in cumulative investments, and up to, or I should say, over 7,500 member investments. Pretty amazing growth. And can you tell us about the type of sectors or companies that you offer private investing into?
Sure. And by the way, as of this morning, it's closer to 121 million.
Wow.
So, it's an investment platform that's on 24/7, right? So every day we've got people coming in making investments, and that number keeps going up. We've invested in approximately 41 companies to date. And while we're not sector specific, meaning we invest across a whole variety of sectors in tech. However, if you looked at our platform, you will quickly notice that the preponderance of the investments have been made in two sectors, fintech and digital assets, right? Part of the reason for that is, just obvious. It was kind of what me and Bill Saris knew from our backgrounds. And, like all things, right, you want to invest in stuff that you can understand and know, as opposed to invest in things that are going to require you to go to university for 4 years and get a PhD before you can even begin to understand, right? Sure. So I had 3 years of crypto experience before then. And it's an asset that I'm personally invested in as well. So I kind of had that background, right? And Bill, and then I've been an investment banker all my career before then. Bill had been working with banks for a significant period of time building their apps. So he knew a lot as well about the plumbing and the payment system of banks and all the regulations relating to that. So it was a very, very easy thing for us to kind of focus on those two sectors, and they remain an important focus for us. The remarkable thing about that decision, and we made it in 2019 and put it into effect in 2020, was the part of the decision that had to do with investing in digital asset companies, right? everybody knew about fintech at the time, but their definition of fintech was not crypto.
Mm.
Crypto was like this alien thing from another planet. It
Sure.
wasn't, you had like legitimate fintech, and then you had all these crazy people in crypto. I mean, that truly was
Sure.
still the sense back then, right? We were, I think, able to see around the corner. And so when we made these investments in 2020, I remember my friends in the traditional VC space kind of asking me like, are you crazy? I mean, you guys are just starting out and now you're going to do this. And why are you investing in these companies, right? Don't you want to like, invest in things that are household names that everybody knows about? And as it turned out, we were actually prescient, because in the following year of 2021, the whole VC industry, the traditional VC industry, woke up.
Yeah.
And in that year of 2020, right, digital assets represented 10% of total VC investment. It was unheard of. That's a huge slug. 10% of 330 billion.
Right.
So 2021 was a record year for total VC funding, but it was also a record year for blockchain technology, digital asset VC funding. That 10% number was, there's no precedent for that in the industry. The year before was 1/8 that number, Tony. So in 1 year, the investment into blockchain technology, digital assets grew by 8x, right? We were there the year before. And as a result of that, so for example, we were an early investor in Coinbase before the IPO.
Wow.
And our customers were able to get it at a volume weighted average price of $32 per share, right? I don't know where it traded today, but by the time their lockups expired, right after the IPO, the selling price was about 8x. So they made an 8 times profit.
I wish I had found your platform back then.
But back then people were saying, why are you guys investing in Coinbase? Are you nuts? Right?
Yeah.
Right. So we were lucky is what we were, right? We were lucky to have gotten, a whiff of the promise of digital assets of the blockchain relatively early, to become convinced of it, to have had the opportunity to act on it, and then to have the rest of the market adopt it at, not too long after, right? So we got lucky because of that.
That's pretty amazing. And like you said, you guys were ahead of the curve, saw what was on the horizon. And to your point, I've interviewed many investment firms and hedge funds, and they're raising so much capital to invest in this market. So yeah, you guys were certainly ahead. And the fact that you got into Coinbase ahead of the IPO is pretty big. Now, I've seen some of the crypto companies on the site, such as Ripple, Uphold, BlockFi, and so forth. Tell us about that and the folks, the companies that you've chosen, and maybe some of the methodology or thoughts behind that. Yeah.
So the digital asset offering is particularly rich, and we're continuing to grow it, right? We have today, Coinbase obviously is exited, so it's up in the public market on the exchange. But we've got Uphold, we've got Ripple Labs, which actually was our very first investment.
Oh, wow.
The very first investment we made on the platform was Ripple Labs, because we had high conviction and still do around that name. Obviously, it's been stymied by the SEC action that you're well aware of. We believe actually that provides a particularly good opportunity to get in, because the price has been repressed in the private market, no differently than the price of the XRP token has been repressed because of the SEC action. But if you look at that from a pure investor standpoint, that's actually good, because it allows for tremendous entry opportunity at a price that otherwise wouldn't be the case, right? When we invested in Ripple at the time in the private market had a valuation of 10 billion. based on its last round of capital raising. And Coinbase at that time was actually less than Ripple.
Wow.
Coinbase was 8 billion compared to the 10 billion. Right. And you see how fully valued Coinbase has become. I mean, Coinbase at the top was about 86 billion, right? It's now probably at about 30 because of the market conditions we're in. But we invested at around a little under 8 billion. Right. Wow. And so even today, that's a tremendous, but Ripple, think about it. Ripple's price has pretty much been flat. Right. They were able to they bought a whole bunch of their stock back at 15 billion, but 15 is nowhere close to the range that Coinbase has been valued at in the public market. So we think there's upside potential there. Right. We also have Uphold, we have BlockFi, we have BitPay, we have Abra, we've got Dapper Labs, which are our very first investment in the NFT space. We're very excited about the growth of NFTs in the metaverse, and we're going to look to make investments in that space again. We're trying to make investments in, names like Animoca and OpenSea and Forte, right? And then, of course, outside of NFTs, just the traditional cryptocurrency and also blockchain infrastructure, we're looking to make investments in.
That's pretty awesome. And it seems that almost every year there's new opportunities and different types of companies that are popping up in the crypto industry. As you mentioned, NFTs, and who knows what's going to be next. Things are just growing at a rapid pace. I want to talk a bit about how, and I don't know how much you can speak to regarding this, but your Linqto makes the investments and then offers the shares to the private investors. Is that how it works?
Yeah, kind of. There's a nuance there, and it's a very important nuance. So we make the investment. We go through an investment selection process, right, where our investment strategy is part fundamentals, part sector analysis, and then part price analysis, right? So what does that mean? It basically means we identify areas that we think are sort of foundational innovation areas, and meaning these are areas where the technology is going to cause significant long-term disruption, and therefore you have a long tail of value creation and therefore monetization, right? It's not just a today thing. It's something that's going to be decades long. Right? So clearly digital assets is one such space, right? And then we look sort of idiosyncratically, we look at what are the companies, specific companies in that sector, right, that we think we can make bets on. And then we look at everything, screens, what stage of development are they in? Are they at revenue? Is there a clear product market fit that's demonstrable? Do they have a business model that can scale, right? What are the unit economics like? Are they able to make money today? If not today, how soon, right? Those things. And then if they pass that screen, the third thing is, are we able to get it at a price that gives us the upside and the risk-adjusted return we're looking for?
Sure.
Right. So that's roughly how the thing works. And then the tough part in private markets is once you say yes to all those things, you've actually got to find the stock, right? So there's only two ways of getting that. One is you got to get an allocation to a venture capital round that a company is doing, or if a company isn't in doing a round at that particular point in time, you basically have to find one of the founders or one of the members of the C-suite or one of the employees with a bunch of stock and convince them to sell us some of it. So that's where the art comes in, right? We're now building an origination capability on our app and on our website to just broadly solicit those shareholders so that they can come to us as opposed to us chasing them all the time. They can come to us. They can basically see what stocks we want to buy. And if they like the price we're offering, they can hit a button and they can go straight into a transaction and get it done. Right.
Wow.
But that's basically how it works. And once we acquire the shares, Tony, we put the shares in a Delaware LLC, in an SPV that we manage. And then we basically go to our investment community and say, hey, do you like this company? Here are the reasons why we like it. If you agree and you want to invest, come in and buy units of this SPV, and you end up becoming a fractional owner of that SPV shareholding, right? And you can do it for as little as 10 grand a pop. And then when the company goes public or has a liquidity event, we distribute the shares to all the different, we collapse the SPV, we distribute the shares out. If you're somebody that doesn't want shares in your brokerage account, and you just want to take the cash, and we'll just sell the shares and give you cash. So that's sort of how it works.
So that's great that you have the two options. And, you know, a platform like yours, to kind of look at it from a macro perspective, you're democratizing private investing, and you help lower the threshold for folks to enter into this and to almost become like the other investment firms and the VCs in the industry, which are investing in the companies and the tokens, which we're seeing that trend is growing quite quickly.
Exactly. So here's the analogy to that, right? If you look at the development of market structure in the public equities market in the last several years, and this is particularly true in the United States, one important phenomenon, and I think it's going to sustain, I don't think it's like a one-time anomaly, is the significant increase in direct retail participation in the market. Right? So the amount of capital that retail investors trade in that market has gone up from, under 15% to close to 30%, right? In the private markets, in comparison, the participation by retail accredited investors like you and me historically is pretty much zilch, zero, nothing, nada, right?
Yeah.
Because unlike the public markets, it's just really tough to access.
Yeah.
Right. That's the problem we're solving. We want to make regular people a force in that market and completely change the market structure. Because today it's all institutions.
Yeah.
It's all big global family offices. It's all, VCs and PEs and hedgies and sovereign wealth funds, everybody but you and me. So now it's about, let's get you and me in. Yeah, $10,000 may seem like a small number, but what if I were to tell you I'm going to multiply the $10,000 by 1 million, by 2 million, by 5 million people, right? There's 100 million people today, arguably, around the world who are accredited investors. But how many of those people actually can invest systematically in the asset class, right? The answer is very few. So if we can harness that pool of capital and organize it, it becomes a powerful force in the private market, just as it has become a powerful force in the public equities market, right?
Yeah, absolutely. And it's so analogous to crypto, and in a way folks can participate in a network or a blockchain and be token holders. And I think we're seeing just a trend because of the internet. You had the GameStop short squeeze and people coming together, crowdsourcing. So it absolutely makes sense. Yeah,
it's the essence of democratizing the space. And you're absolutely right, because a lot of these ideas actually were inspired by and came from that experience I had working in the crypto and the blockchain community. It's that ethos, which is very, very different than the institutional ethos that I had learned, being a traditional investment banker. And at Linqto, our forward vision is to basically move the company in the direction of that. We are ultimately going to become a digital asset company ourselves, because we are going to migrate this investment platform and the investment community that we're building to the blockchain. We're going to digitize, tokenize all these securities that today are traditional securities into digital form to make them much more easily tradable, fractionalizable, right, on a blockchain exchange. And we'll, one day be able to take those Linqto securities tokens that represent interest in Ripple or Uphold or whatever company, right, and list them not just on a trading platform that we're building at Linqto, but list them on other people's exchanges as well. Maximize the amount of liquidity that is available to the holders.
That absolutely makes sense. And it's, I think, a sign of what's to come with the token economy and 24/7 trading, everything on the blockchain, like you said, fractionalized as well. Now, there was something else, and I don't know if it's related to what you just mentioned, but you can certainly educate us about it. You have an upcoming blockchain-based alternative trading system, an ATS and wallet, and it's going to be built on the XRP Ledger. Is that related, or you can shed some light?
Yeah, that's exactly what I'm describing, that trading platform. In the States, you need to get a specific license from the SEC, right, in order to operate that kind of a secondary market trading environment for these SPV units that we're issuing, right, that are tied to the different stocks that, we and our community invest in. So that once we should get that ATS license in, the next 90 days. Initially, what we're going to build is just a non-blockchain based trading platform, but we are in the process of implementing on the XRP Ledger. And once that is ready and we have the wallets that need to support that trading built as well, then we'll slowly migrate the whole platform in the community to that new blockchain-based system.
Wow, that's pretty amazing. I have to ask, and I may know the answer to this, but I'm sure this is a question folks may want to know. Why did you choose the XRP Ledger versus other blockchains?
Because if we're able to realize our ambitions of growing this market, right, and we're talking about having millions of people holding these tokens and trading them actively, you're going to need to have a system that has a couple of requirements. You need low latency, meaning very, very quick processing to have a true market. You're going to need very, very great volume scale, right? Unless you have a blockchain that can transact huge volumes, but at very, very low latency, right? And you're going to need low transaction costs, because if the gas costs are high, I mean, that's an impediment to the trading, right? So clearly the XRP Ledger has pluses on all of those attributes.
For sure.
So,
well, I'm sure a lot of XRP holders are going to be happy to hear about that, and that's pretty cool. I can't wait to see that rolled out. You mentioned the SEC, and we're going to talk a bit more about crypto and crypto regulations later on, but there has been talks with the SEC about lowering the accredited investor bar, so to speak. Does that affect what you guys are doing in any way?
Very much so. I mean, we have engaged in those discussions ourselves informally, and we will probably later this year take those discussions up to a more formal level. And by that, I mean, we want to approach SEC staff with some ideas we have on how we can reasonably relax the accredited investor requirements while ensuring that investors still have adequate protections, right? And aren't going to either get scammed or make foolish decisions that will lose them bags of money. We've talked about that principle and have thrown some ideas in the informal discussions we've had. And what we want to do eventually is basically get an exception for Linqto, where the SEC basically says, Linqto, in your particular use case, we'll allow you to do all these things, right? And as long as you adhere to these ground rules that we've agreed upon, you can take in non-accredited investors into your platform. So that's definitely on our roadmap, and something that is an important part of democratizing the space as well. Also, within the ambit of existing regulation, right, there is this thing called Regulation A and A plus and Regulation CF, and they basically are crowdfunding regulations. And so we're also looking hard at those regs to see whether we have the ability to apply those as well to the kind of assets on our platform, and bring in retail non-accredited investor capital into the asset class. So we're going to try both those two paths. We're going to take in parallel.
That's great. I think the technology's here, the education's here. It's time to allow people to invest, and there's been so many gatekeepers over the years, and like you said, like, folks couldn't get access to these type of investments, but I think it's time, and it's great to see that you guys are leading the charge on that.
Yeah, because if you look at here's the reason why the gatekeepers are keeping the gates is because they're making all the money, right? And all the money is, if you look at returns in the public markets from 2000 until now, and you look at the returns from private investing in that same time period, the returns on private investing have been 8 times better, right? So, it's hard for people that are, in an exclusive sandbox where you get to, play and enjoy those kind of returns, to see it opened up and democratized. Because as the market gets larger, like with any market, right, prices are going to become more stable, and the margins will probably shrink, right? So the market becomes more efficient, and so I do think that private market returns are always going to be better than public, for a whole variety of reasons we can talk about. But I think that the delta will shrink as more retail investors, or more like individual accredited investors like us, enter into that market and change its structure. And that's actually good for the maturation of the market, right?
Yeah, for sure. And just opens up a lot of opportunities for the common man, if you want to put it that way. Which should have been there before. So I want to ask some quick questions, which maybe these are quick answers, such as I'm sure people are going to ask about security and using the platform. If you could tell us about your security features and protecting of funds and shares and things like that.
Yeah. So the good thing about the shares is that they're all, when we acquire the shares and our SPVs hold the shares, they're in book entry form, meaning they're actually just maintained electronically by the corporate treasurer or the appointed secretary of the issuing company. They never actually go out of that until the shares are registered and listed for an IPO. It's only at that point that the shares get distributed. And so at that point, the company's transfer agent moves those shares to our custodian, and then our custodian turns around and distributes those same shares to the brokerage accounts of our customers, right? That's basically how it works. But prior to that point in time, everything is just, electronic book entry on the books of the issuer. There are no shares to speak of that are outside, right?
And are you open to just U.S. investors, or are there plans to go beyond U.S.?
We already have about 15% of our customers being non-U.S.
Okay.
Right. And so we have large customer bases in Canada, in the UK, Western Europe, like the Netherlands, Belgium, Switzerland. We have large customer bases in those countries. And then in Asia Pacific, I would point to Australia and New Zealand. And in the Middle East, we have fairly large customer bases in places like Kuwait and the UAE. So it's becoming more and more global. And I think over time, as word spreads, and maybe we do a little bit of localization as well as we grow on our app and our website to make it more easy to transact if you're not, fluent in English, right? I think that the number of US as a percentage of the total is going to go down. I should also, by the way, address your question about security, because this is super important, right? We because of the background of our founder, Bill, and the guys that he brought with him, our core engineering team came with Bill from Intuit, which is the company that built a whole host of financial applications like TurboTax is the one that's probably best known, right?
Sure.
So they understand well bank regulation and bank security requirements. And so our system has been built with those same kinds of standards and requirements in mind. That's number one, by a team that has worked in that kind of domain for the longest time, right? But we didn't also want to trust ourselves with just saying, okay, we think our system is secure. What we did was we employed a third party. They're actually based in New York, and we actually have their stock on our platform. If you want to invest in them, I think it's a terrific tech company. They're called Security Scorecard. They're like the Moody's of cybersecurity. Like, how Moody's will rate bonds and tell you how creditworthy an issuer is.
Right.
Security Scorecard will come in, assess your systems, test them, and give you a scorecard. We brought them in, and when they first came in, I think they gave us a grade of B-. And we said, okay, now help us figure out what things we need to fix to get an A. So they did, and we did our part, and we have been an A ever since, and we intend to remain an A on Security Scorecard.
That's awesome. I know you mentioned quite a few items that you guys have that you're working on, like the alternative trading system and so forth, and building kind of a marketplace, if that's the right word, of where shareholders can come say, well, hey, I want to sell some of my respective shares for this.
Yep.
Is there anything else on the roadmap for 2022 that you can hint at or share?
I think that's probably the single most exciting development, right? Because when you think about it, there are basically two big problems in an individual like you and me accessing private markets. One is there are three problems. One is access. How do I even get into these deals? How do I even get the opportunity to invest, right? We've solved that problem. The other problem is just affordability, right?
Sure.
The average block that trades in the institutional side of the private market is probably about $8 billion. Right? You and I aren't going to be in the business of writing those kind of, well, maybe, I don't know about you, Tony. I certainly,
yeah,
those checks like left and right? So now we have a platform where you can do it for 10 grand. So I can take 50 grand, I can spread it across 5 names and have a terrific portfolio, right?
Sure.
Impossible in that institutional market with those dollars. So we've solved that affordability problem. The third problem, which we're trying to solve, and that's why I'm excited about it with the ATS, is liquidity. The institutions that invest in this space, because of the way their funds are set up, or because of who they are, there's some billionaire oligarch guy, it doesn't bother them, right? That money is going to be locked up for 2 years, 3 years, 5 years, because they go into it with that intention, right? But you and I are like regular human beings. Things happen to us in life. I mean, I don't know, what if my dad gets sick? a month from now and he's got to go to the hospital. I got to help with that, right? Or, what if my kid needs to go to this special program at school that I hadn't budgeted for? Or what if I just want to buy a vacation home and there's a great opportunity to do that at a place that my wife and I love, right? I mean, so those kinds of things create demands for liquidity. And if I've invested, say, 100 grand in XYZ company or companies on Linqto, and one of those life events happens and I need liquidity, well, guess what? I mean, I need to figure out a way to do it. Our ATS will give that person the way to do it. Mm. They can take, say, 20,000 of my 100,000, and maybe I need 20,000 of that in liquid form, so I go and sell it on the platform to other members, right? Or sometimes it's not life events. It might just be sheer profit taking, right? Because remember, these companies are increasing in value, even in the private market, right? Because their revenues are growing, their customer bases are growing. When they do another funding round, they're valued at a higher amount. So all those all those developments of value creation are being reflected in higher prices on the platform. At a certain stage, someone wants to monetize it. A guy that invested in Ripple on our platform at $32 may now want to sell it. Our current price is $48.50. Well, but heck, maybe they're saying, okay, maybe I think Ripple is going to IPO at $100 or $150, but for right now, maybe I could just sell a bunch at $48.50 and take some profit off the table. Perfectly fair, right?
Yeah. And that's such a great option to have. Like you mentioned, like just life scenarios and situations that pop up. And we're not like you said, the VC guys who want to wait, 5-6 years.
Yeah, they have a fund that basically says, keep my money for 10 years. And, that's fine, right?
Yeah.
That's not the life that we're in. So.
Sure. That's great. I love that. And that flexibility that you can have to, like you said, want to take profits or you want to exit completely, you can certainly do that. Very cool. So as far as, jumping onto the platform, maybe you can just tell us, folks who are listening, they're like, okay, I want to go check out Linqto. What would be the next step for them and the process to get signed up?
It's super simple. So if you're an accredited investor, and by the way, if you don't know what those requirements are, right, you can come to our platform and you can pull information there that will explain to you what it means to be an accredited investor. The definition differs depending on what country you're from. So from the top, let me say that. If you're American, right, the rules in the States are, as an individual, you either have to show that your income in each of the last 2 years was more than 200,000, right? And obviously that your income will be more or less the same in the current year. Or you can show that you have a net worth that is at least $1 million, not counting the value of your home, your principal residence. Right? Those are the two requirements. There's also a little bit of a workaround because the SEC says if you happen to hold a particular securities license, you can also become an accredited investor without necessarily meeting those financial tests. So if any of your audience are registered securities reps, it's either a Series 7, a Series 60, a Series 65, or a Series 82, right? So if you hold one of those licenses, you can also become accredited. But if you're an accredited investor because you meet those requirements, or if you're a foreign investor, come to us. We'll let you know what the requirements are in your country. All you do is you go to our website or download our mobile app, right? You'll go through a very, very automated AML KYC where you show your proof of identity, right? We match that against a picture of you take of yourself. We run a very, very high speed check of more than 1,000 databases to make sure that you're not a bad guy, right? And Once you pass that, you basically are able to click it to invest. You select what investment you want to make. We have a very rich database available on the website and on the app, right? We have a partnership with CB Insights in New York that gives us access to their entire database on tech unicorns. So we provide that data, that information for free to our investors. So you can do your own research. Additionally, we provide our own some of our own proprietary research on each of the names that are actually on the platform. Right. So based on all of that, you can then make your investment decisions, and then you just click and invest. And you make an order, and then you have 5 business days in which to fund that order. You can fund the order by either sending a wire transfer, or if you're a crypto person, we have another partnership with a digital wallet company called Uphold. You open up an Uphold wallet, and you can use your crypto or any asset in that wallet to fund your investment on Linqto.
That's great that you can use crypto via Uphold. That's awesome.
You link your Linqto account to your Uphold wallet, and once as part of your account setup, if that's the way you want to go. So we have people on any given day using XRP and Bitcoin and Ether and whatever other coin they might have to invest in private investments.
Very cool. Well, that sounds pretty simple to do, and it's great that you have the option for crypto. I know a lot of folks, a lot of my audience are certainly crypto holders, and that would be a great option for them.
Cool. Exactly.
So I want to talk about the crypto market. Obviously, you've been an entrepreneur building in the crypto market. You mentioned you own some crypto. Would you be able to tell us what you have in your crypto portfolio?
I mean, there's obviously the big 5, and then I've got a couple of, altcoins here and there, largely as a result of, airdrops.
Sure.
But I'm particularly, heavily weighted on XRP, Solana, Cardano, and those are probably the 3 biggest holdings.
Those are great ones. I also have those in my portfolio. What are your thoughts on how the crypto market has grown so fast and significantly? And you hinted at some of this earlier as you were in the building phase, and then all of a sudden all the VCs started coming in, in 2021, and we've seen the price rise, but we're seeing adoption globally. Corporates putting Bitcoin in their balance sheet, just different companies adopting Bitcoin, different blockchains, tokenizing items, building stable coins, and so forth. What are your thoughts on how things have grown?
I went through, the disappointment of crypto winter, and I saw all the people fleeing at the time. And I think today, we probably may see some of that too. A lot of people that, haven't been in the asset class that long fleeing because they have short-term disappointment. And what I would tell them is, look, what we're talking about here is investing not just in any particular coin, but in the growth of an ecosystem that is built on a technology layer that is hugely disruptive and is going to end up permeating every form of enterprise out there, and even sort of non-businesses, right? It's that foundational. So take the long view, right? Don't have the sort of the short term. I mean, if you make riches, quickly, God bless you, and I'm happy, right? But don't make that your primary investment thesis, right? Take the long view, because if you were, it's like if you had invested in the internet, right, in 2000, and then bailed at the end of 2000 because that market tanked, you'd be kicking yourself in the head today.
Sure.
Right? And the same thing is going to happen with blockchain technology. I have absolutely no doubt of that.
Yeah, it's amazing, and it seems crypto is seeping into all aspects of society now. We're seeing the mass marketing, we're just seeing the adoption by different businesses. It's amazing how things have grown. Um, as far as different facets of crypto, you have like the NFT market, you have the metaverse, you have cryptocurrencies like mining with Bitcoin, and you have digital assets. What are your thoughts on NFTs and the metaverse?
I think they're also a really important component of the overall growth of that digital asset space, because they address a separate set of needs, right? That cryptocurrencies and utility coin don't.
Sure.
And that has to do with the creation of non-fungible value and the exchange of it. So the thing about cryptocurrencies and utility coins is that they're fungible, right? Meaning each one is the same as the next one, and they're replaceable one for one. I mean, one XRP token is no different than the next one. Same thing with ETH and Bitcoin or whatever, right? That's why they're usable as currencies, because you don't care, whether somebody gives you this dollar bill or that dollar bill. It's the same, it's just a dollar, right? NFTs are fundamentally different than that, because they allow you to convey unique, one-of-a-kind value. And there's a really important part of the whole world of commerce, as well as, in the creatives, right? Where that the authenticity, the value being tied to a very, very unique single thing becomes supremely important, right? You think about the art world. How important is it to you, if you have a high valued piece of artwork, to make sure that you're buying something that isn't a fake? Yeah. And that when you're selling something, the guy knows that what you're selling is a real thing and not a fake, right? NFTs solve that problem through cryptography, right? You've basically sealed the authenticity, it's checkable, and you can't transmit fakes otherwise without it being known as a fake, right? So that's super important. The other important thing is that, a lot of the things that are uniquely valuable, are not necessarily easily exchangeable, right? Yeah. So the first, generation of NFTs were natively digital assets, and that's going to continue to grow. I mean, I just spoke to somebody earlier today that, I won't mention names, but I was trying to buy shares of Forte from, right? And he was telling me about the in-game economies that they're building. They're going to be launching the first game. That's a super exciting area. But those are all natively digital assets. What most people don't realize is that there's this other huge use case for NFTs that have to do with the tokenization of non-digital assets, not assets native to blockchains. But think about houses, for example.
Right.
They're eminently non-fungible, right? The house you live in and mine, they're like completely different. They're in different parts of the world. They look different. They have different, everything about them is different, right? How do you sell that house in an efficient way? It's really hard. The whole title process is messed up, man, right? How do you prove you actually own that house? And that is the house that you own, right? The whole title process is like based on the 18th century, basically.
Yeah.
If all of that were resident on a blockchain and encapsulated in a non-fungible token, and if you could then actually fractionalize that, that's the other interesting thing, right? You get a lot of people can own pieces of rental properties in a very, very efficient way and trade those properties without all the hassle of time. So I'm just thinking aloud here and spitballing, but there are a whole bunch of these use cases that are going to emerge as a result of the development of that NFT, technology. So people just think about it in terms of games and the metaverse, but it's so much bigger than that.
For sure. Yeah, there's so many opportunities. And, like you mentioned, fractionalizing and tokenizing real estate. I've seen folks looking to do rare cars and just even physical artwork. It's pretty amazing. We'll see how things progress and what else gets tokenized. But as the technologies growing, getting adoption, and we're seeing just growth across the board, there's still the struggle, it seems like, for government to catch up with clear regulations, especially here in the United States. Now, I think we've made a lot of progress. President Biden released an executive order. More members of Congress are getting on board with crypto. But a lot of folks see a major hurdle with the SEC. And the pressure is kind of looming here with the SEC on what are they going to do? Are they going to update the how we test all these things? What are your thoughts on what's happening?
I think that it's inevitable that that regulation always follows as opposed to leads innovation. It's just the nature of it, right? In other words, we shouldn't necessarily be surprised or disappointed that our regulators have been slow to understand, grasp the implications of this technological change, and then to make regulations that are sort of more accommodating of that change. That's just, there isn't, if you look at America alone, never mind the world, right? There isn't any single important change that's taken place, even outside of technology. And when you look at society and politics, right? All the important changes have happened because people on the ground drove the change first and the laws followed. Right? Civil rights is a good example. There's so many things I can point to, right? The laws will not lead, they will follow. It's up to us, the people, and that's what's happening with the blockchain, to move the charge and pull the regulators along. I have no doubt the regulators are going to get pulled along because we've already seen it in all the other developed countries, right? We're the laggard, we're the last. But you're not going to be able to hold, it's like trying to hold the ocean back, right?
Sure.
It's not, it's impossible.
It's a great point you made that, the regulation's not going to lead, the government's not going to lead in changing, but they're going to follow. And I think we often forget that. So that's a great point.
Yeah. And it's the force of popular adoption, as with social movements and other innovations, right? Outside of tech. The internet used to be a pariah. Most people don't realize that. But if you read a book about the history of the internet, they were making the same kinds of things. It's only be used for illegal activities.
Right.
It's only going to be used for porn.
Yeah.
Right? Stuff like that. Every important technological change goes through this very, very, very simple process. And I'll describe it to you succinctly. First, they'll ignore you. You don't matter. What is that? It's not even worth. Then they'll laugh at you. The phase of ridicule, right? Then they'll fight you because then they realize you're real. You might actually disrupt me.
Sure. And
then you win. That's the final part. Then you win.
Yeah, for sure. And we've seen it with all disruptive technology, right? Just even the automobile and the horse and buggy people getting disrupted, and so on and so forth. I know we're up on time, so I got some wrap-up questions here for you. If you could create your own metaverse, what would the theme be about?
That's a great question. So, most of my friends are into all these other worlds that get created and stuff. Ever since I was a kid, and I was into sci-fi, right? The thing that fascinated me most was not about going to all these other worlds and all these alien creatures. The thing that fascinated me most were these time tunnel things or these time machine things where you could go back in time. I've always been a history buff, and so maybe that's part of it. But so my metaverse would be like, this thing where you're able to somehow go back and forth in time. Where there's like no time boundaries, right? And you have these people and beings that are able to just shuttle effortlessly between different eras of time and see what that experience is like.
Oh yeah, that would be great. I just think about the learning opportunities, right? What that could be in school, make it more interactive and learning about what life was like in the 1800s or whatever it may be. But yeah, I mean, I think that certainly is something that's going to be built out for the metaverse.
Yeah, yeah.
Some rapid fire questions for you. Favorite food?
Everything, man. You know, I told you, I honestly, there isn't anything, and I've eaten some things that human beings wouldn't eat just because of the way I grew up as a kid. I lived in so many different places. So I don't have any favorite food in particular. I honestly, I love everything.
Favorite musician or band?
Ah, so when I was a kid, I was mostly into rock, right? And that still remains a love. But as I've grown older, I've become a really big I have a great love of classical music and great love of jazz. Today, if you ask me, I'd say 90% of the time I'm listening to classical music and jazz. And when I go to see live music, it's almost always jazz.
Very
I was
cool.
actually trying to score some Lincoln Center tickets when I was in your hometown last. It's one of my favorite places.
Oh yeah, yeah. I went to high school right around there. It just has a real big place in my heart. And I went to LaGuardia, the art school. It's Juilliard's right there, and the Lincoln Center's right there, and had my graduation
Awesome.
at Lincoln Center. It's pretty cool.
Yeah, I just love that whole history and you know, my favorite era of jazz was the one that got spawned, you know, in Harlem during its heyday, and all the great cool jazz and bebop musicians of that era. That's like my absolute favorite era. I just I love that music.
Yeah, it's great music, and I as a guitarist, I've tried to play some of it. It is complex music to
It's
play.
hard.
It's hard. Favorite movie?
Ah, gosh, Chariots of Fire.
Awesome. Favorite book?
Too many, too many. I mean, you know, I don't know. A Sentimental Education. Flaubert, the French novelist.
Gotta check that one out. And finally, you know, when you're not working at Linqto, what are you doing for fun as a hobby?
Working at Linqto overtime. That's actually been the story of my life. No, you know, like you, I used to do two things for fun. One was play guitar. I'm nowhere as good as you, but it was just something I always loved and always had a guitar by the side. Now I've given my entire guitar collection to my sons, who are the avid players, and one of whom is a professional musician.
Oh, wow.
And then the other thing I used to do, which now I'm really too creaky to do, is just play pickup soccer. I played that sport as a youth and played it into my adulthood until I got injured, and then, you know, played injured for a couple of years. But then once I got involved in startups, honestly, got super tough to make the time.
Sure.
So.
Well, I'm sure your head's down working. You guys are doing some great stuff at Linqto. Joe, it was a pleasure chatting with you. Thank you so much for joining me today.
You're very welcome.